The petrodollar system has been a cornerstone of global finance since the 1970s. But today, its dominance is being questioned. Let's dive into how the BRICS nations and other regions are shaking things up. First, a bit of history. In 1974, the US struck a deal with Saudi Arabia. Saudi Arabia agreed to price its oil in dollars and invest in US treasuries. In return, the US provided military equipment and security. This arrangement, known as the petrodollar system, supported global demand for the US dollar. It helped the dollar remain the world's key reserve currency and the primary currency for global oil and commodities trading. Fast forward to today. The world has changed dramatically in the past 50 years. The US share of global GDP has dropped from 40% in 1960 to 25% today. Meanwhile, China has emerged as a major economic power. It's now Saudi Arabia's largest oil customer. The US, thanks to the shale revolution, is the world's largest oil producer, reducing its dependence on Saudi oil. This shift has pushed Saudi Arabia to diversify its oil sales into other currencies. Saudi Arabia's recent engagement with BRICS and its participation in Project Bridge, exploring central bank digital currencies for cross-border payments, show a significant move toward currency diversification. This could be symbolic for now, but reflects a broader trend. Countries are increasingly seeking alternatives to the US dollar for international trade and investment. One reason is Washington's frequent use of economic sanctions, which exposes countries to financial risks. The infrastructure for using local currencies in cross-border payments is already in place. Currency swap lines between central banks and linked national payment systems are operational. However, there are efficiency costs. Local currencies rely on less liquid and developed foreign exchange and money markets compared to the dollar-based system. Despite this, many countries are willing to bear these costs to reduce their exposure to the dollar. Advances in digital payment technology could further erode the dollar's dominance. The concept of tokenization involves using digital tokens like CBDCs or stablecoins for payments. Tokenized units of exchange can be transferred instantly and directly between participants without intermediaries. While tokenized currencies aren't yet widely adopted, they could reduce the need for countries to hold large dollar reserves for liquidity. This undermines the role of US Treasury securities in supporting the dollar's global dominance. Already, the dollar's share of global reserves has declined from 71% in 1999 to 58.4% today. In the near term, the US dollar is likely to retain its dominant role in global finance, but its unparalleled influence could gradually diminish. The global financial system may evolve to a more decentralized structure. Local currencies like the Chinese renminbi, the euro, and the Japanese yen could play more significant roles. The petrodollar, once a symbol of US financial dominance, may see its importance wane as the international financial system democratizes. So what do you think? Could we be witnessing the fall of the petrodollar? Let me know in the comments below. Thanks for watching, and don't forget to like and subscribe for more insights on global finance.